Hello there. Welcome back to EMS at grade 9. In this video, we want to look at the preparation of journals. And we have got a question that we want to look at that is here on journals. So our question reads, use the transaction below to prepare the following journals of 7-Eleven supermarket for the month of November 2020. So 3.1, or that question represents cash receipts journal, and it requires 6 marks. And then if you look at the second part, it's our cash payment journal. And the marks that are there, we put 4 marks for cash payment journal. So journals at the end of the month. And then the second note that is there is that the business applies a markup of 25%. Very important. So on the second note that is on the application of the markup of 25%, so we have to take note that our formula that involves a markup says our cost price. If you say cost price at the end of your markup, you are supposed to get your selling price. So basically, this is what we have. And then if you do this, cost price is always 100%. And then markup depends with the question. It depends on the percentage that you are given in the question. So in this question in particular, we have got 25% representing our markup. So here we're going to say plus 25%. And then you are going to get it as 125%. So basically, this is what we have in terms of representation of cost price, markup, and sell price. So we also need to know what exactly is a cash receipts journal and what exactly is cash payment journal. So we have generally to know that both of them they are books of original entry or books. So basically, we know that according to our accounting cycle, the information that is in the source documents, example of source documents, we have got receipts, invoices, the documents that act as proof that a transaction has taken place. So information in the source documents is supposed to be transferred in the subsidiary books or the books of original entry, which includes the cash receipts journal and cash payment journal. So basically, that's what we have. So cash receipts journal in particular is referred to as the main entry book used in the accounting system to keep track of the sales of item when cash is received and any receipt of cash in the business is supposed to be recorded in the cash receipt journal. So it represents cash inflow. So basically what we are saying is if there's any transaction which does not involve the movement of money, we are not supposed to enter it in the cash receipt journal. If we have received, we haven't received the money, we do not record that in the cash receipt journal. For example, we have sold goods on credit. It means we didn't receive anything in terms of money. So that transaction automatically does not apply or fit in the cash receipt journal. So a cash payment journal becomes the opposite, whereby cash payment journal, we are saying it represents cash movements out of the business. If we make a payment whereby we are paying actual cash, we record in the cash payment journal. So in particular, it also applies that if we buy something on credit, we are not supposed to enter it in the cash payment journal because there is no actual cash movement. So basically, this is what we have in terms of these two subsidiary books. That is the cash receipts journal and the cash payment journal. So going with our question, see that we are given transactions that we are given there that we need to go through as we prepare the cash receipts journal and cash payment journal. So what is important is to identify each and every transaction. If there is actual movement of cash, if there is actual movement of cash, then we can record in the cash receipts journal and the cash payment journal. But if there is no movement of money or cash, we are saying we are not supposed to record them in those two journals. So we can start with our first transaction. So before we do that, we have got our answer section that is going to apply according to this question, which is we are having our cash receipts journal. We have got columns that we have, and then we also have the cash payment journal. So these are the two journals that we are going to use as we post the transaction that we have there. So on the first part, that is on the 6th, we are given that cash takings and the two amounted to 5,600 rands for goods sold. So basically, this represents that we have sold goods on a cash basis. So as we are seeing, there is cash amount that has been received. So this is supposed to be in the uh, in the cash receipts. It applies in the cash receipts journal. So here we can just indicate that the CRJ, which is the cash receipts journal, applies here because there's actual movements and of cash that we are seeing there. We received money. So in that case, we go to our cash receipts journal. You see that this is our cash receipts journal. So we start with our document number. So if you refer back, I would see that these are cash takings. So obviously, we are going to see the information in the register. So we come here, we are going to say CRR. Then we move on the day. The day we are seeing that we have got 6 here, representing the day. So if you come here, we are going to say 6. Then on details, we are seeing that on details, these are cash takings. So whenever we sell goods, we attempt the goods that we have sold sales. So we come here, we are saying details sales. Then under the column portfolio, we can leave that blank. We do not have any information that we can put in the column portfolio. Then on analysis of receipts, we are putting the total amount that we have according to our sales. The amount that has been received is 5,600. So this is the amount that we are just going to put here. Then from there, we have other columns that we have to consider again. So if there is in this case, we say the amount that we have actually received is 5,600, and obviously it's going to be received through our bank. So we're going to put it in the column for our bank. Then from there, we are seeing that we have got sales, cost of sales that we have there. And this column obviously is going to represent our debtors control. So what we are saying is we check if the transaction that is in question does it fit in these 3 columns, that is our sales, and then I'll check if it also fits in class control. Then we pick the column that it fits and enter that column. So if it fits in these 3 columns, it means we are not supposed to enter it again under the sundry debtors column. So in this case, we are seeing that these are sales. So obviously they are going to fit in the column for sales. So in that case, we do not. So we are not supposed to post it again under the sundry debtors columns. So very important for us to take note of that. So we are saying the amount that is going to fit under sales is 5,600 as it represents our sales. So we are saying 5,600. And we are supposed also to put the figure for cost of sales. Remember, whenever we sell goods, we have a proportion for cost of sales in that total amount of the sales, that is our selling price, and then we get our cost of sales. We have already put down in terms of the formula that we can use. So here, this is the representation that we are calculating cost of sales. And we are seeing that this is our representation. So basically, we are going to make a simple proportion whereby we are going to say the figure that we are given is for sales, and sales in this question represents 125% is equal to, we check in terms of the representation that we have according to our amount, which is 5,600, is going to represent the total of sales. So it's 100%. So we're going to say 100%, which is our cost of sales, our cost price. Our cost price is our cost of sales. We take note of that. Obviously, in that case, we are going to get a greater figure, which is less. So a very important there. And then we make a simple representation. We make a simple representation whereby we are now going to say what we don't have there is 100%. So that's the question mark. So what we don't have becomes the numerator. And then what we have becomes the denominator. And then obviously it's over 1. So we take note of the formula that we are supposed to apply there, whereby we are going to say what we don't have is the numerator, what we have is the denominator, and then we multiply by the given figure. So in that case, we are going to see that the final answer that we are supposed to get is 4,408. So this becomes the representation or the proportionate representation that we have in terms of our cost of sales, which is our cost price, in particular according to this video. According to this is our cost of sales, 4,480. So as simple as that. So in that case, we do not have to post again under the sundry debtors column. We can just represent it as our sundry accounts. So we can just make a correction in terms of the representation that we have there. whereby we are saying we can represent it as our salary account in terms of this heading. We are supposed to have our salary accounts. So this is what we have here in particular, according to the columns that we have there. So obviously we move on to the next transaction that we have according to this question. So we can just maybe proceed. So our second transaction reads sold goods on credit to RB for 3,200. Invoice 2022 was issued. So in this transaction, we can notice that there is an element of selling on credit. So whenever we see that there is credit that is involved, it means we do not have to enter that transaction in the cash receipts journal, is we are saying these goods are being sold. So we are supposed to receive money, but this money we haven't received it. So obviously, we are going to record it the time that we are going to receive. As soon as we receive the money, as soon as RBS pays the amount owing, that is 3,200 rand, we then record it in the cash receipts journal. So what we are going to do is we are just going to leave it there. It doesn't apply in the cash receipts journal, but obviously it is supposed to be entered in the debtors journal. So here we represent it as the debtors journal. Then we go to the next one, which is on the 17th. Purchase the stock on credit from pay sellers for 5,670 rands. It was numbered to 29. It was renumbered to 29. So we are seeing that this is a gain on credit. So it was supposed to be the cash payment zone if we had paid money actual cash. So in this case, there's no such. So obviously we do not have to enter it in the cash payment journal. So but it's supposed to be in the creditors journal. So we can take note of that. And then we go to on the 19th, sold goods on credit to M Ghana for 4,000 rand. Sold goods on credit to M Ghana for 4,000 rand. So we see again that this is in the issue of credit that is involved. So we do not have to enter it. It's supposed to be again in the debtors journal. So we can just leave it. Then we go to on the 21st, we say a debtor RB paid 3,200 rands in settlement of her account. Receipt 541 was issued. So here now there is an issue of cash movement that is there, as you are told that there is a payment that has been made. So it means this one is this is money that has been received. So we are supposed to enter it in the cash receipt journal. So it's very important for you to identify the movement of the cash. Are we receiving or are we paying? So in this case, it's a debtor paying. So obviously we are receiving. Remember, a debtor is defined as an individual business that we have sold goods to on credit. So whenever that debtor is paying the amount that is owing, we are supposed to receive money. So this applies to our cash receipts journal. So we can enter this. We can start by entering in terms of the document number, whereby we have put 541 as our document number. So we go there. We go document number 541. We can just represent it as 541. Then on the day, obviously we have put us on the day we have put 21. So we can just put our 21. The details on details. Remember the name of the data that we are receiving money from is RB. So you can put RB. And obviously we go to the analysis of receipts, whereby we are going to put the amount that has been received. We can just try to see in terms of the money, which is 3,200 that we have here. So we're going to put our 3,200. Then from there, we are supposed to identify. We are supposed to identify in terms of does the transaction fit in the columns that we have there. Remember, we've got our columns that we have here. That is our sales, cost of sales, and debtors. And we are seeing that this is money that has been received. Obviously, it's going to be received through the bank. So we are going to put our 3,200 again here. And then we check if it applies in the sales column, cost of sales column, debtors column. But we are seeing that this is a debtor that is paying money. So we are supposed to see it in the debtors column. So it's not going to apply under the sundry accounts columns. So we put our 3,200 in the debtors control column. So basically, that's what we. So in that case, it doesn't. It's not supposed to be part of our standard account. So this is what we have. Then we go to our next transaction, which is now on the 25th. It reads settled. Uh, settled. That is on the. But believe that on the same transaction of the 21st, we are told that cash sales for the day we have 1,500. Cash sales for the day we have got 1,500. You were told that RBA paid 3,200 settlement of the account. So receipt 541 was issued. So since we are told that cash sales is 1,500, means this 1,500 is part of our 3,200. So basically we can just try to fare back and see how we can try to adjust that one. That we've got our cash sales, that is 1,500. So it means we also have to make an entry for cash sales, which is 1,500. And this is a part of sales. So we come here again, we put the same date, the same date. We come here. That is our date is going to be 21 again. And obviously the CRR is also going to apply here as the register. And then we in the details we are saying these are cash sales. So in the details we put our sales. And then the amount that has been received is 1,500. And it's also going to apply in the column for bank. And then in that case, we check if it applies again the three columns that we have, that is sales, cost of sales status. But we see that these are sales, so it's going to apply in the column for sales, calculating the cost of sales. Here, remember, these are sales, so we have to have a portion of cost of sales. So we make that representation again, whereby we are saying we are given the sale price is 125%, so we say 125 is equal to the figure that we have there, which is 1,500. So 1,500. And then the figure that we are looking for is cost of sales, which is a cost price, which is 100%. Then we say 100, and then we try to calculate that. That is the missing figure that we have there. 100%, so it becomes the numerator. What we have is 125 becomes the denominator, and then multiply by the given figure, which is 1,500. Then in that case, we multiply and see what we get. And you see that we're going to get it as 1,200. So this becomes our cost of sales, which we are supposed to enter here. Under the column for cost of sales, we put 1,200. So basically, this is what we have. And we have seen that it is qualified in the three columns, so we're not supposed to post it under standard accounts. So the only items that we post under standard accounts are the ones that do not qualify in these three columns: sales, cost of sales, and debtors bottom. So from there, we can now be able to move on to the next transaction that we have, which is now on the 25th. We say settle the amount owed to Popeye wholesalers. Check 334 was issued. So settled means the business has paid money to Popeye wholesaler. So it's cash payment journal. So that's the first thing is to identify which journal. So we have got the cash payment journal in this case, and our document number is 334 payment journal. This is our cash payment journal, whereby we are saying our document number. We have 334. Our day we've got